If you own a home in Snohomish County or you're trying to buy one, you need to stop what you're doing and watch this. The market here just made some of the biggest moves we've seen in years, and most people have absolutely no idea it's happening, even real estate agents. Listen, closed sales dropped 28%, homes are sitting 26% longer, and prices are softening. This is not the same market it was even just 1 year ago. I'm going to break down the January 2026 numbers for Snohomish County and tell you exactly what it means, whether you're buying or selling a home right now. Stick around because I'm going to give you the strategies that are actually working in the market right here, right now, today. My name is Mike Novak. My wife Rachel and I have been selling homes in Snohomish County for 9 years. We tour these homes and these neighborhoods every single week. I want to share with you what the data is actually showing us. These are the January 2026 numbers, fresh off the press. Let's dive right into it. First of all, what I want to point out to you is that the market is slowing, but you need to take this with a grain of salt. The numbers do prove that it's slowing, though. Let's dive into the numbers. The closed sales dropped from 427 down to just 307. That's a 28% drop year over year for January. We always compare the same period of that same year or that last year. So it'd be January 2026 versus January 2025. We're not comparing January to December. We're comparing January to January. That's very important to keep in mind as you think about the seasonality of real estate, okay? New listings went up 4.9% to 708. That means more homes are coming on and fewer homes were selling and going under contract. However, and this is very important to note, the January numbers, they're the rear view mirror and they reflect what happened in November and December. If you look at the closed data that we're now looking at for January, those homes went under contract usually around Thanksgiving or the first week in December, and they closed out here sometime in mid-January or early January after the new year. So it's kind of telling you what happened towards the end or the fourth quarter of 2025. And you want to keep that in mind because it's a little bit misleading when you compare it to what's happening right here, right now in real time with active contracts and homes that are on the market right now. Right after the new year, we saw activity jump right up, and we see this happen every single year. Buyers put the search on pause around Thanksgiving. They enjoy the holidays with their family, and then they pick the search back up after Christmas, after the new year. By the second or third week in January, the buyers are back in the market that were looking before, and they're now touring houses again. On top of that, and this is really big news, the mortgage rates finally dropped below 6% for the first time since 2022. We've been waiting so patiently for rates to come down. Everyone's been asking me. I've probably been asked 10,000 times over the last 4 years, Mike, when are rates going to come down to 5%? And they're not down to 5%, but they're into the fives, okay? So that is really, really important. I think there's a psychological component and dynamic that plays into this for buyers. And when buyers see rates that start with a 5, even if it's 5.9, 5.8, that makes them feel more confident about making a move. And also it just makes homes more affordable at a very practical level. Obviously, the two dynamics that go into how much you pay for a home is the price and the interest rate. Those two things you have to really pay attention to. And interest rates have been high for the last 4 years. In 2022, we went from 3% interest rates all the way up to 8.5% interest rates in 9 or 10 months. It was a very, very quick increase as inflation was skyrocketing from the COVID inflationary market that we had. There was a lot of currency that was pumped into the market, and that currency was increasing inflation dramatically. And so, of course, rates had to go up to compensate for that, and everyone felt that. We felt it in gasoline prices, we felt it at the grocery store, and of course, you saw it in mortgage rates as well. But this is huge news. This is like groundbreaking news that we have the lowest rate since 2022, and it's something that's going to help both buyers and sellers. For buyers, it makes the homes more affordable, of course. You can spend more on the home and have a lower payment, which is a huge win. For sellers, it means that more buyers can afford your house. So that's a big win for you guys as well. More supply, less demand equals inventory building up fast. So that's kind of what happened in the end of last year. We saw a lot of inventory come on the market. We saw a lot of it sit on the market and not move and not sell. And I'll tell you why here in a little bit. A lot of it was pricing. And those homes, now they're going under contract. So, but they didn't go under contract till after January. So it doesn't show up in the data quite yet. The second thing that you want to be aware of is that homes are sitting longer, like I just kind of talked about. Days on market jumped from 42 days in January 2025 to 53 days in January 2026. 26% interest or increase. That's a really big jump, right? Like that's a big increase year over year. And a lot of sellers are feeling that. They feel like their homes are sitting on the market for a very long time. And it is a long time compared to 3 or 4 days that was normal in 2020 or 2021. But you have to remember that's not historically the norm. Historically, the norm is that homes take 2, 3, even 4 months to sell. And we're getting back to a more normalized market. That's great. That's fantastic. Okay. If your home is not priced right, and if it's not prepped right, you're going to feel this. When I tell sellers how to price their home right now, because the market is so dynamic and because it's changing every week and every month, I'm making sure I'm telling them that we have to look really heavily and put a lot of weight into what our active competition looks like. What else is on the market that a buyer is going to tour that might be a competitor to your house? And you have to price and position your home to stand out and hopefully beat those other listings and entice a buyer to offer on your home versus the other ones that they have available to them. Just a couple of years ago, this dynamic was not available at all. If you were lucky, there was one home per neighborhood for sale per price range. Now there's like 3, 4, even 10 in some neighborhoods. So buyers have options, and you have to be aware of that as a seller. That means you have to nail your price. Buyers, a home sitting for 53 days that a seller is ready to talk, and you can use this as leverage. We saw some of the biggest concessions from sellers in Q3 and Q4 of 2025 that I have seen in a very, very long time, like going back to probably 2017, since I've seen these kind of concessions. I had a buyer get a $50,000 concession, another one get a 60. These were like real dollars that buyers were getting off in closing cost credits, interest rate buy downs, 2-1 buy downs, dollars off the house, big deals, right? And this has not happened for years. So it's a really cool opportunity for buyers. Of course, it's frustrating for sellers. The third thing I want to talk about is that prices are softening, and I'll kind of tell you where I think they're going to go later this year here in just a minute as well, because I know everyone's wondering, where's it going to go? Price is going to go up or are they going to go down? But the median sales price went from $760 to $715, which is down about 5.9% year over year. It's a pretty big drop. The average price, which is the one that I focus more on, also fell from $867 to $831. That's real money. But this can be a good thing as it makes the market more affordable. We have to remember that just back in 2017, the average home price was about $450,000 right here in Snohomish County. And we're looking at almost double that just 9 years later. That's a crazy increase in price. Of course, it is unsustainable, and it keeps a lot of buyers from being able to afford a home. When you look at the increase in prices, and then you look at the increase in interest rates, that is a very tough dynamic for first-time home buyers to enter the market. If they don't have a home they're selling and a lot of equity to put down on a house, it's very difficult to afford buying a house as that first-time home buyer with those average home prices and the higher interest rates. So just something to keep in mind. I know that short-term this hurts you as sellers and as homeowners, but we have to realize that it's going to make homes more affordable long-term, which is a big win for the market. And that if you just hold on to your house and you don't sell it like really quick, you live in there for 5, 7, 10 years, your home is going to make money and appreciate consistently over time. You gotta have to remember, real estate is a long-term investment. It's not designed to be speculative. I know lots of people sold homes in like a year of ownership back in the COVID market, and they still made money. That's just not how real estate really works. I always tell my buyers that if you're going to buy a home, make sure you're going to be there for at least 3 to 5 years to not lose money when you go to sell. If you want to make money, think more like 5 to 10 years. Okay. So buying a home is a long-term play. If you can't see yourself being in that home for that long of a period of time, maybe it's not the right house, or maybe you just need to rent for a while until you figure out exactly where you want to be. The percent of list price received. This is important. It slipped from 99.9 down to 98.8%. So homes are basically selling at list price. But what this doesn't tell you is it doesn't tell you how much concessions were given, because concessions don't count towards this number. And I can tell you from being in the trenches in real estate all of last year and having a busy team that sells a lot of homes, that there's concessions being given by sellers in most of the transactions. Some of them were small, like $5,000 to $10,000. Some of them were huge, like $60,000, like I shared with you. And a lot of builders rolled out some of the biggest concessions I've seen in a long, long time. A lot of them were 50,000 plus to get their inventory moving because they're just sitting on so many houses. So small number, big meaning. Bidding wars pushed prices up, back in the day, like last year, even before that, of course, in particular in 2022. So the sky high pricing we had is definitely cooling off. Like I said, I think this is a long-term good thing for the market. It's going to be short-term painful, But I do think that home prices are going to stabilize this year as rates continue to flatten and come down. As rates come down, prices go up. Those two things go in opposition of each other. A lot of times buyers will tell me they're going to wait for rates to come down before they buy a house. And I have to remind them and correct them that when you say you're going to wait for rates to come down, you're also saying you're going to wait for prices to go up. So keep that in mind. You can't get the best of both worlds. You can refinance your rate when rates drop, but you can't refinance the price that you pay for the home. So this is a great market to make a move for buyers. Like, this is an awesome time. This is probably going to be the best deal you're going to get for a while. We definitely saw that in the end of last year, and I think it's going to carry into a little bit of this year before that goes away, which is great. Buyers got beat up pretty hard in 2020, 2021, 2022, and now they've got some say in some negotiation. Real estate's designed to be a two-way negotiation, not just to have the seller demand what they're going to get and get $100,000 over list price and 20 offers. So this is a good dynamic where we've now got equal buyer and seller negotiation occurring. That's great. The fourth thing to talk about is inventory. Inventory is up a lot. Homes for sale jumped from 715 to 955 in Snohomish County for January, and that's up 33.6%. The months of inventory supply went from 1.1 to 1.5 months. The months of inventory supply is really what I call the crystal ball about where home pricing is going. When the inventory supply goes up to about 3 months or 4 months, that's when you see significant price softening occurring. So we're well below that right now. We're still at 1.5 months, which means if there's no other homes that came on the market after today, in 1.5 months, every single home would be sold. So historically, that is very low. That tells us prices are likely going to stabilize, like I said earlier, okay? But buyers have more options than they've had in years, but it's important to keep this in context. It's still technically a seller's market when you see a 1.5 months of inventory supply, but the trend is pointing towards a balancing neutral market as we're watching inventory go up. So what does this mean for you as a buyer? Well, it means you have breathing room. It means you can negotiate. You can ask for concessions. Could never do that before. You can actually inspect the house. There was a lot of people waiving inspections, during the COVID market, just to get their offer accepted. When there's 15 or 20 offers on a house, you put an inspection contingency in there, and it can be very hard to get that offer actually to be competitive. Getting closing cost credits, like we didn't see any of that for years. So that's really great stuff for buyers that has not been available for a long time. But buyers, you want to use the days on market, meaning how long the home has been listed, as your signal for how hard to negotiate. The longer it's been sitting, the more flexibility you're going to have. You can expect that seller's going to be pretty dug in on their price for the first couple of weeks after the home comes on the market, 14 to 20 days, somewhere in there. But if the home's been sitting for 3 weeks, 4 weeks, and they have no offers and maybe showings are low, that's when that window to negotiate starts to open up. But you have to be realistic. I've seen a lot of buyers putting lowball offers on homes that just came on the market 24 hours ago, and that's not going to be a winning proposition for you. Like, you have to be patient. You either have to put out a competitive offer if the home's been just put on the market, or you need to be patient and see if no other buyers make a move on that house, which of course means you risk losing that home. And then if the home sits for a while, that's when you can start being more hardcore about your negotiations. You have to have a strategy for this, though. And the days on market is your barometer for it. So as we get into the spring selling market, expect things to be more competitive. Expect some of these concessions and deals to go away. I've actually seen multiple offers in a couple of situations on our listings in the last couple of weeks. Again, we had like 4 offers on a Bothell house. It escalated well over the list price, very competitive, lots of contingencies waived. Had a similar experience on a home in Marysville, similar experience on a home in Everett as well. So we are seeing multiple offers. It's just very price dependent. It's very location specific. Some homes hit a big buying bracket, meaning there's a lot of buyers that fit the buy box for that house, where others are more specific and they don't have as big of a buying pool that are attracted to it. So it's very individualized right now. It's very sub-market dependent. It's not just broad sweeping, multiple offers on everything. But rate buy downs, repair credits, HOA coverage, sellers are open to deals they wouldn't have touched even a year ago. So that's great for you. Sellers, what does this mean for you? When you look at all this data, how do you interpret this? Well, you better price it right from day one. Overpriced homes are just going to be bleeding days on the market. Get your home prepped, get it staged, and get it inspected before you list. I've been telling all of my clients to do this right now, my listing clients. Have your home pre-inspected. And the reason I'm telling my clients to do this is that about 25% of homes that go under contract nationwide are going back onto the market. and they go back into the market because of buyer anxiety, not because of inspection issues. But if you have the home pre-inspected, the odds of getting a buyer to waive their inspection contingency goes up astronomically. And most buyers use that contingency to back out in the first week of going under contract. So it's going to make for a much tighter offer you're going to get from a buyer. It's also going to alert you to any issues you have in the home that you need to address before you list the house. A lot of times sellers and owners are not aware of issues they have in like the crawl space, the attic, things like mold, rodent activity, insulation issues. The inspection is going to make sure that you have your eyes wide open to all of these things. You have a chance to address them before you list your house so you don't have any surprises. You don't want to come back on the market. That is always the weakest position to be in, and you have to have a strategy to try to mitigate the risk of that happening. Your presentation also matters. Like I've seen a lot of listings come on that have no staging or no virtual staging. The rooms just look totally empty, or the spaces have not been optimized. They're very cluttered, and that is not going to work. I tell all my sellers that the first showing now happens online. It does not happen in person. So how your home shows up in the photographs is extremely important, actually getting people to come out and see the home in person. If the photos don't look good and the presentation of what's in the photos does not look right, people won't come look at it, plain and simple, okay? So pricing, positioning, and presentation, those are the three keys that you have to get right. And when it comes down to price, like I said earlier, do not test the market. This is not the time to do that. This is not 2020, not 2021. Do not get this wrong. You need to price your home to stand out amongst your active competitors. You can't just look at something that closed 6 months ago and say, hey, I'm going to list my home at that price. That will not work 90% of the time right now. Instead, you need to look at what's actively on the market that a buyer would likely go tour and consider competition to your house, and make sure you have priced your home to stand out against those other houses. If you don't do that, if your home looks overpriced compared to what else is out there, if it doesn't look like it's going to show well compared to what else is out there, then your home simply will not sell. It's going to sit there on the market, and then you're going to probably pull it off in a couple of months because you're not getting the showings, you're definitely getting the offers that you expected when you listed it, because you did not list it right, you did not do the presentation right, and you did not get the pricing correct, okay? But the sellers that are winning right now, they're the ones that come in sharp, ready, and priced for today's reality. They're not caught up in the fantasy of 2022 thinking it's still that time. My wife, like I said, Rachel and I and our team, we've helped over 1,600 families in the last 9 years buy or sell a house right here in Snohomish County. We work with qualified buyers and motivated and coachable sellers each and every day. So if you're thinking about selling or buying, go to the link below, schedule a time to chat with us, and see if we might be a good fit to work together. Of course, like this video, share it, and subscribe to the channel so you don't miss out on my updates that come out twice per week every week.